ain't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Yo, good morning, everybody. Happy Monday. Hope you all had a great weekend. This is the morning show here on Stock Market TV. What are we talking about today? Let's see. We're talking about a lot of new highs, right? Just an exorbitant amount of new highs out there. We'll talk about that. We'll rip through some of those charts. Got a lot of news this morning. A lot of random news from like Adobe, news from Neo, U.S. Steel. That's like the big news of the day. So we'll get to that. Michael Nauss will join us at 9 to talk backtesting. We'll have Ian Cully at 9:30 to talk commodities, I'm assuming, or currencies or bonds. I'm not quite sure, honestly. We'll figure it out. So if you're watching us on YouTube, do me a quick favor. Hit that thumbs up button, please. And if you're watching us on X or Twitter or whatever you call it, maybe head over to YouTube for 2 seconds. Give me a like. I'd appreciate that. And JC's here. Steve is here. So let's roll. Hey.
All right. Happy Monday, everybody.
Hey, guys.
I like your shirt, Strazza.
Chart report. You heard of it?
I have. It's is it my favorite daily email? It's top 2, top 3. You know? It's up there.
Got to be up there.
Everybody's Cowboys, man. Those Cowboys suck. They really looked terrible last night. You know?
They're pretty bad.
The Bills could beat anybody, though. I mean, they whooped them, but
they could also lose to anybody, as they've proven. I'm in the city on Wednesday. City kid, city day.
What are you doing?
You know, business meetings. You know,
Business.
business papers. You know,
sounds fun.
Condolences. The Bums lost. Most amount of new highs in over 30 months on the New York Stock Exchange, which is the world's most important stock exchange. It's not the one in the Philippines, Strazza.
No.
It's the one down on the corner of Wall and Broad, out in the old financial district. Right? What do you think about that? Most amount of new highs in 30 months. Is that a bad thing?
Never a bad thing.
Is it evidence of weakening market dynamics? Does it mean the market's getting weaker, or does it mean the market's getting stronger?
Here's what I will say, right? Because a lot of charts like that are floating around and being talked about. We had the overbought one on here. And while you'll catch a wide variety of criticisms on Twitter when you post, just obviously bullish charts like that, the one good one that gets pointed out oftentimes, and I'm happy it does, is that over the short term, it's usually not a good thing, right? Like new highs spiking, short-term new highs to multi-year levels. It doesn't mean the market's going to stop going up tomorrow, but it means you might have a week or two of corrective action coming up.
Maybe, right. It's not bullish or bearish in the short term. It's more of a characteristic of the environment.
It could be exhaustive in the short term, which is fine, because it might last weeks, and then we'll see. Could be. Right? Or these things keep melting up. Again, this weekend, I ran it on a different universe this time. I wanted to see the small caps because some of these growthy small caps have these overbought streaks going, like what Uber had last week. A lot of them. So you're seeing that participation just move down along the cap scale, out on the risk spectrum. Really good stuff. Meanwhile, a trader or a more tactical person could look at these charts and say, wow, are we extended? Spencer was telling me we were extended last week or the week before, though.
I mean, you could have said we were extended a month and a half ago.
And I did. I was complaining.
That's the point I was making.
Remember when I was complaining about wanting to take profits in Uber? That was like almost a month ago now.
Yeah.
So
yeah, but it took you like a couple weeks, right?
Yeah. I held on as long as I could.
Yeah.
In bull markets, stocks tend to go up much more and for a much longer time than people expect, right? That's actually a perfectly normal perfectly normal implications of a healthy market environment, that stocks go up longer than most investors expect, right? It works both ways, by the way. In bear markets, they go down a lot longer. Oh, it's oversold. It needs to bounce. Oh, any day now we're going to bottom, right? You know what I mean? Like that's what happens in downtrends. You see it works both directions.
How about the cryptos? Is the party over already?
Well,
I mean, bloodbath out here in the cryptos, right? I mean, how terrible. Bull market over?
You're being facetious.
Bloodbath is a stretch.
It's a stretch. Yeah. It's you know, it's we had a historic run, and they haven't even corrected. You know, like I know you're joking, but like actually to your point, like it's actually pretty impressive how well they've held in despite, you know, that sort of rally, right? It's actually pretty impressive. Why don't you hit that bumper there, Spencer?
Alrighty.
I think this is a good one. Dow Jones Industrial Average, most important stock market index in the history of humankind. New all-time highs. Bad thing, Strazza?
Never a bad thing.
Contrary to popular belief, the Dow Jones Industrial Average is actually the most diversified of all of the major U.S. Indexes. How do you feel about that?
Yeah. So that could mean a good thing or a bad thing.
It's definitely a broader. It's definitely the broadest measure of the stock market, most diversified.
So it gives you. So it gives you
the best.
I think what you're saying is it gives you better information than something like the NASDAQ 100, but it's probably not the vehicle you want in a bull market.
I don't necessarily think it gives you better information. I think it gives you different information, but the fact that it's so much more diversified than something as concentrated as the NASDAQ definitely makes it a broader measure, and therefore
isn't that better?
Arguably more important.
Yeah, so that's better information. We're saying the same thing.
I don't want to say better though, Strazza. You know what I mean? Like it's not better; it's just different.
It's not telling you about growth stocks; it's telling you about the broader market.
It's telling you about growth stocks also, though.
If the Dow's so diversified, so much more diversified than the S&P, why are they correlated like 1-to-1?
They're not. It just looks like
they kind of are.
Put the correlation up. It's not 1.
Okay, fine. I'm sorry. 0.9 something.
It's never 1, but it's pretty damn close.
The Dow and the NASDAQ, if you zoom in, sometimes they're not that correlated. Look at Q4 of last year. NASDAQ's trading at lows. Dow's up 20%.
It depends. If technology is dominating, then the Dow's just going to underperform.
And then this year it flipped, right? And the NASDAQ was up 20%, 30% in a quarter.
Right, let's remember what's in it. That's why it gets back to what I was saying before. It's not that one gives you better information than the other. It gives you different information. But I mean, I'm old school, guys. I'm old school. And when I was younger, I used to think I was cool, and I did it the new way, and institutions follow the S&P, and I thought it was so cool, right? And I was a fucking idiot, right? This is it, guys. You got the Dow Industrials, and you got the Dow Transports. Don't fight Papa Dow. And when I was younger and dumb and ignorant, I used to fight Papa Dow, and I used to think that these indexes were stupid. And then once I actually started to respect the information coming from these indexes, it made my life a lot easier. I promise you guys from the bottom of my heart, if you don't follow these indexes every single day, you're doing yourself a disservice and you're making your life harder. I can speak from experience. I used to make my life harder.
I was looking through old media files on my computer trying to clear some stuff out the other day, and I stumbled upon a video had to be 5 or 6 years ago, where I went through every Dow 30 component, right, to basically make a read on the broader index direction. And I was laughing. I was like, JC definitely told me to do this. It was like a practice YouTube video.
Dude, 30 stocks, right? 30 stocks. That's all you need. 30 stocks. And then the trannies, you got 20 stocks. 50 names. No big deal. Right? It'll take you no time to go through them. Highly encourage you to do it. Number one, if you get this group right, you're going to get the rest of the market right. Number two, you're going to find great trade ideas, right? And number three, if you trade options, most of these things are all super liquid, especially in the Dow Jones Industrial Average. In the trannies, you start getting a little shady sometimes with options volume in a few of those names, but in the Dow Industrials, I mean, these are the biggest, most liquid names. So it's an options trader's dream. We're making new all-time highs. And listen, the bigger thing is here, correct me if I'm wrong. I'm no expert. This looks like an uptrend, consolidated for a couple of years. Well-deserved, by the way, after the greatest 52-week period in the history of the United States stock market off the COVID lows. Well-deserved digestion here, multi-year consolidation that's now resolving in the direction of the underlying trend. Is anybody interpreting this differently? Is there a different argument to be made here?
Let's try and guess the best and worst performers in the Dow. 2 weeks left in the year. Not even.
For the year?
Yep. Year to date.
Oh, Salesforce? That's just my guess. I haven't looked.
Nice. Yep.
Is it?
Yeah. Very good. And you should know the worst too. Like you know the worst.
Walgreens?
Yeah.
Yeah. See?
Apple,
pretty good at this.
Apple and Microsoft right up there as 3 and 4, like you'd expect, but Intel.
Yeah, Intel.
Intel hasn't been this high on the Dow performance board in, gosh, I don't know how long, my whole career. Chevron down there at the bottom with J&J, 3M, and Coca-Cola.
Dude, that 3M, that not a top in 3M is looking, continues to look very juicy.
Yep.
Same with Disney, right? Disney and 3M, two Dow components that, if you reverse engineer the bull market and, these names are working. That's my new trade. 1,000 shares of Disney for the kids. You take the profits and you spend it at Disney. That's how to do it.
Wow.
Not bad. Not bad.
That's my new trade.
I like that.
You like that, Strazza?
I like that.
Yeah.
Cool.
I realized it when I was there. I was like, yo, $12 hot dogs? Damn, son.
And you see, I look at a chart like 3M even. I say, this is the worst drawdown the stock has ever experienced in its history. If you look at it, you could say, okay, that top completed when it took out the COVID lows like 20 points ago. And not only is it completed top, but the move has been made, right? You got the follow through right into a very logical level at these old, prior cycle highs from the early 2000s, mid 2000s.
You talking about Disney?
No, I'm talking about 3M.
Oh,
I like the setup here.
It's the same setup as Disney. What's the difference?
I'm saying it looks to me as though the top already completed. You could argue, right? So it completed. You got the measured move lower right into a logical support level. Maybe you get some basing here, but
go up slide 2 there, Spencer.
Yeah, you see what I'm saying? Great level to start accumulating, especially for a longer term position.
Yeah, the squeeze above 113 and it's on.
Hopefully that
it's on like Donkey Kong.
Hopefully they don't get the boot from the Dow.
Honestly, I hope they do. That's
right.
That usually works out pretty well for these stocks.
You're right. That would be, I guess that would be more of a buy signal than a sell signal if it had to be.
Hell yeah, dude. Hell yeah. A bunch of journalists getting together wearing suits and kicking this out of the Dow like they have any expertise.
Leave them alone. It's great information for us.
Leave them alone. I'm sure they love their kids.
All right. Do we want to do news? Are you done?
Am I done with what?
Stating the markets.
No, I want to talk about high beta breaking out to new all-time highs relative to low volatility. That is the old slide number 5.
Good one.
$5 discount. Right? Is that what it is? $5 footlongs? What is it? What was it?
And we're seeing so many of these, right? You could do the same thing with credit spreads and then overlay a chart of the S&P 500. You could do this with different risk ratios. They're all kind of triggering and I would say supporting the price action from risk assets over the past month and a half, 2 months now, right? Do you agree?
I mean, this is just not something you see in unhealthy market environments, Why
don't you talk about how we use this for confirmation, though? Like, why are you overlaying these two assets?
Well, in healthy market environments, high beta stocks tend to outperform low volatility stocks. We've seen consumer staples and low volatility underperforming for quite some time. And some people were suggesting that it was a sympathy selling coming from utilities and real estate as bonds were getting killed. And I said, nope, that we have enough data that suggests that I'm going to assume it's not that. I'm just going to assume that it's money rotating into more offensive sectors. And as it turns out, it's exactly what it was. Had little to do with utilities and REITs and bonds, and more to do with money was fleeing the safe haven, particularly on a relative basis, of consumer staples and low volatility. And Sure enough, the stock market, which, as you guys know, is a forward-looking discounting mechanism.
Yep.
As it turns out, was discounting the future. Hey, ain't that some shit? Ain't that something?
So this black line down here is what we call a risk appetite ratio. And while we might only know so much about these ARKI stocks or these speculative growth stocks that have only been trading for 3-4 years, and we only know so much about Bitcoin and the cryptos and what they really mean for risk, what we definitely know from looking back forever is that a hallmark characteristic of a healthy bull market is investors embracing risk. So you want to see an increasing level of risk appetite, or just a very high degree of risk appetite, right? That is just a hallmark characteristic of a bull market. This ratio measures that. When they are favoring the high beta or riskier stocks versus the high quality or lower volatility stocks, green light.
Why don't you throw up slide 7? Speaking of green lights. That light turned green a long time ago. At what point do we stop calling this a new bull market? And at what point do we just call it a bull market? Not new. Maybe we can call it an old bull market. Old is probably a stretch because we don't, they're like, what inning are we in? It's like, well, my grandfather once went to a 23-inning game in Yankee Stadium. So does it actually matter what inning it is? It can end whenever it wants to end, Right, you see that, Spencer? You like that one, huh?
That's actually a good analogy. That's actually a very good analogy.
Figured that was right up your alley.
Yeah,
Spencer
that was. I
Israel
enjoyed
coming
that.
to us, former employee of the MLB Network.
Yep.
We're definitely in the thick of it, right? I don't know how middle or late stage it is, and like you, I don't like to put that kind of a label on it, but it definitely isn't early anymore. We're already at or beyond the stage, or right in the middle of it, where kind of everything's working. Sure, maybe you could say, oh, well, the mega caps are taking a little bit of a break, or just that short list of early.
Didn't technology just close at an all-time high Friday?
Right. So not even.
So are they taking a break?
Everything has really been working. A lot of just full green screens going on day in and day out the past few weeks. So that's not early, right? Early is the leaders leading, other stuff still pretending like it's still a bear market.
What about this? And what about these angry bastards that are in cash with their money markets? Think about these angry bastards, how angry they must be that they're just missing out on historic gains because they're sitting there in cash with their thumbs up their ass. That must be miserable. Good. I hope they're suffering, because the more that they're suffering and the more miserable they are, the larger the squeeze that we have coming, the bigger the unwind, right?
It's amazing, right? Because you wouldn't have seen people flood into money market funds in the 80s when they're giving 5%. But now, because we're short-term thinkers, everything's relative. 5% looks great. If you've been paying attention for the last 10 years, 5% is fantastic. 5% is like, what? For a lot of people.
Now adjust for inflation and pay taxes, and you're actually in the negative.
I get that, but it's still a lot more than zero or a quarter or half.
Slightly less than zero, I believe, actually.
I don't know.
Imagine being in cash. Oh, must be torture. Good.
I think some people are also just blissfully ignorant.
Yes,
so right. they're not angry. They're just blissfully unaware.
And that's a good important point. Those that are blissfully ignorant still haven't even realized how much money that they're losing. So they haven't even come to that conclusion. So the anger and the disgust in their decision making, they haven't even gotten to that point yet. So we're so far from the squeeze.
Listen, we don't know what's going to happen.
Yeah.
No.
Never
have. For the record.
Do you think bonds keep moving higher here?
Yeah, probably. I mean, listen, you're the one that keeps pounding the table that, foreign yields have been a great leading indicator, and they have, and they're completely falling apart. So you think the U.S. yields are going to go up in the face of global yields getting destroyed? Is that the bet you want to make?
I think it really becomes a question of sideways or lower, right? Back in that range.
These yields are getting killed. And by the way, stocks and bonds are moving together. So if you think stocks are going up, you think bonds are going down? You know what I'm saying?
Yeah.
You want to talk about correlations?
Yeah.
Right? So when you talk about the catalysts to send stocks higher, it's not Santa Claus or the Powell or any of these things. It's all these idiots sitting in cash, just thinking we're in a bear market, waiting for recessions. Hilarious. It's comical. It's comical.
It's also 3 or 4 Fed cuts next year. Right. So like if you want to talk about what can derail this, watch the Fed fund futures, because the interest rates are probably having as big of an impact, probably bigger than the dollar. You could say they're one and the same, I think, because they're moving so closely. But if that changes, right, and the market starts pricing in maybe a world next year where we're not cutting 4 times, we're cutting maybe 2 times, or
in a world
uncertainty around when that cutting begins. Right? Like there's some downside risk there if the Fed were to come out and say, whoa. Maybe we don't need to cut at all. Maybe it just
thinks like that. Who thinks like that? Oh, what if the Fed says this? Like, who gives a shit?
A lot of people think like that.
All right.
Most people are dumb. And to quote the great Charlie Munger, rest in peace, if people weren't wrong so often, we wouldn't be so rich.
Strazza, I think it was Thursday, right? The market leaked throughout the entire show, and it was it appeared to be off the backs of one comment from, I think, John Williams, who just said that they may not be done, right? Or he said something, right?
Yeah, he was in a CNBC interview.
Yeah.
But like that's my point. It's very sensitive. Market is very sensitive to this new narrative of lots of cuts next year. Okay, the Fed pivoted, the Fed's on board. If they come out and start to show maybe not so much, and listen, they know that too. So they're going to use that as a tool in their toolbox. We talk about our toolbox. Fed has a great toolbox. It's gotten a lot bigger over the past few years, right? So now one of their tools is simply coming out and sounding more hawkish in an interview or a presser, right?
No.
He can. He can step back some of the comments from last week. Absolutely.
I'm out of fucks to give. I ran out of fucks to give about the Federal Reserve so many years ago, and it has served me so well to ignore these people. Oh, and the amount of humans that pay attention to all this crap. Oh my God.
I agree with you. It's a lot.
It is. Some people like this because the things that we're talking about are moving the prices that you're watching. You would never believe that, but that's how it works.
That sounds like a miserable way to live life.
I mean, I agree with JC. I hate that.
Shout out Jerome Powell. He should be man of the year. Just killing it out here. Awesome.
Okay.
Jerome Powell for the win.
What if the landing was so soft we didn't even feel it? We've already landed.
That's a great point. These idiots waiting for their landing, whether soft or hard.
We've been on the ground.
They missed the takeoff. They forgot their luggage. Half the flight's gone. We're almost there. We're almost in Tokyo.
Speaking of Tokyo.
Tom Lee was on.
Speaking of Tokyo.
How
about that acquisition? Matt Warder's like, oh.
Certainly looks like they're overpaying. Happy to talk about it.
Yeah, let's talk about this. This is
go hit it.
U.S. Steel. Oh, here, yeah, I'll run the bumper. Here. All right, U.S. Steel, which made its first appearance in the Dow Jones Industrial Index in 1901, and then was removed about 9 days before I was born, is getting acquired, taken off the board by Japan's largest steelmaker, Nippon Steel, for $55 per share in cash. That comes out to a total value of just under $15 billion. And that is a healthy look at that premium. It's juicy. Woo!
This stock is up 150% since June. And this is why mergers are tough, because we've been looking at this one like, let's stay away from it. Right. It's under merger talks. So Cleveland,
we've been in the other ones.
We've been in the other ones. Totally. But this one's
not in it. You know what I mean?
Listen, Cleveland Cliffs proposes to acquire them, gives kind of a low ball offer, $35 a share. This was just they were talking about in July. It was announced in August. You saw that big, like 30-something% candle. Then a little bit of sideways, and now another huge premium. It looks like this deal's going through for $55 a share.
Yeah.
Just tacked on $20 in less than 6 months. Stock's up 150% since May. Absolutely ripping. So, sometimes you say, let's stay away. This is a merger name now. An M&A.
This, of course, will have to get approved by CFIUS, right? Committee of Foreign Investment in the U.S. But it's kind of a big deal.
Hold on. I've never heard of this. CFIUS?
Yeah.
Mm-hmm.
So, sort of a big deal. This company is like a basically as American companies get, right?
And Japan is as American as countries get, so I think we're good there, right?
Sure.
Right?
Okay. Yeah. I don't know. Maybe.
How big is this nipping?
What do you mean maybe? We run their fucking military.
Okay.
I think we're good. Us in Japan. I think we're all set.
Okay.
Yeah. Yes. I don't think it's going to be a problem. It's not like China or Malaysia or something. You know what I mean?
Sure. Josh says that we're buying radioactive fish from Japan. They're buying our steel. Great trade.
Dude, Japan has the best fish. Stop talking shit. Come on.
Yeah, don't be hating on Japanese fish. Not in my presence. This will not be tolerated.
Anyway, like one of the near OG members of the Dow is going off the board.
Wow.
So yeah, they might be back. They could be back.
And you know what this means? You know what this means is the X ticker is available. It's gonna be available.
It's when Twitter comes public again.
Wow, that's a great point, Spencer.
They should buy it. He should buy it. He'll probably buy it.
He's gonna buy it like right now.
Yeah. How much did the guy that owned X.com get?
I don't know.
Or did Elon just steal it from the guy?
I don't know.
I remember that Meta paid. There's an ETF firm that had a Meta ticker, and Facebook or whatever Meta paid the ETF company. I don't forget the exact amount, but it was in the millions for their ticker.
So nothing.
Well, for a small ETF company, not nothing, but
right. For Meta, nothing.
Sure, yeah.
And just like the X.com, that because some dude owned it, some random dude, and I never saw like what happened. I think maybe he got an undisclosed amount, which is pretty good for the dude.
I never know what to believe, what they report about Elon Musk, though. That was like a big story when he first bought it. Who knows if it's even true? I don't know. Shout out DMX.
Yeah. Anyway, so
what about Exhibit? No love for Exhibit?
That was DMX.
No, I know, but what about Exhibit? No love for Exhibit?
Yeah, am I right?
Rest in peace, DMX.
Obviously, other steel stocks are going to trade up this morning with this news. So, Steel Dynamics, Cleveland.
Yeah, let's go STLD. It looks so good. Well, yeah, I guess this is just a steel thing. I'll bet you all the metals are moving here. Let's see.
Yeah, you're absolutely right.
I'll bet you Southern Copper's working on this. Yeah, Freeport. Listen, these things woke up. Whoa, what's up with Freeport in the pre-market? I might have bad data.
Nothing flat.
These metals and mining stocks really took a ripper on the heels of Powell middle of last week and followed that through in a big way. And now here with this news, the space is going to be up again today, thrusting on a short-term momentum basis. These industry groups within materials are really thrusting. Then you go look at XLB, and you can draw like a horizontal resistance line there, similar to the one in Spider Financials, XLF, that was just taken out. And you got to start to think, okay, are materials now one of those sectors that we want to be looking at more and more for opportunities? And I think the answer is going to be yes. And that makes a lot of sense with this broadening participation theme, doesn't it?
Yes.
Don't forget the value sectors, is I guess what I'm saying.
Material is value.
Yeah. Cyclical value. Usually one and the same.
But not always.
They mostly are, but there are some industry groups, right, that don't always jive. Like you could say semiconductors are really cyclical and very different from other tech subsectors, but they're still a tech subsector.
All right, let's do one or two more, and then we'll bring our guest on today. Let's look at, just sticking with the M&A theme. This was actually, I think, from Friday. That DocuSign is working towards some sort of a sale or a leveraged buyout or something. So they were another one of these, post-COVID bubble IPOs. I don't think they SPAC'd. I think they were just an IPO.
What's this?
That's DocuSign, DOCU. Yeah. Still in, I think, 80% drawdown, maybe more.
I think this is BS.
Dude, this thing's doubled in like a month and a half or something.
Who's buying this? I don't know. We'll see.
Okay. What else do we have?
The news is good. I'm just saying. This was like it's like private equity rumor, right?
Yeah. Well, it's not that. The rumor is that the company is searching, not that someone is interested, right?
It's a tiny company. It's 12 billion. It was 6 weeks ago.
Yeah.
12 billion is still a lot of money for something that Adobe should really own and dominate, right?
I think they do own and dominate that space already.
They do. So it's like saying Zoom is worth something. Maybe ask Google if they want them.
And then still sticking with the M&A theme, Neo is trading higher, 8-9% this morning. They got a $2.2 billion equity investment from I think some Chinese firm. I'm not really sure. So CYVN.
Never heard of it.
Yeah.
Stocks up 8.5%.
Oh, no, I'm sorry. It's a firm that's based in Abu Dhabi. So some oil money coming into Neo today.
Sure, it's not shady at all.
You know, we have big ownership news also that we'll talk about in the hot corner, but might as well just throw it out here because it's a big headline. Is the JC BVN.
Buenaventura.
There it is. Big 13D filed Friday. The stock was up 25%. Yeah, there you go.
Who was it? Anybody material? Ha ha ha.
I could barely say it. Antofagasta. I believe they're an investment company, Latin America. Alfonso, name. Brazil or Argentina. Yeah, but it's a big Chilean. It's a big stake. 19%. It's active. So the stock was moving as if there might
19% of what? 3 billion?
Outstanding shares. No,
$3 billion. It's like what? A few hundred million?
The company's bigger than 3 billion.
No, it's not.
Really?
Yes, really.
3.6. Wow.
I mean, it's big for Chile. Not that big for us.
One of the biggest companies in Peru.
It's actually an American company. Oh no, it's Peruvian. Sorry. You're right.
So
okay, and then the last. Sorry, I don't know if you're done, but the last M&A headline we have for the day is Adobe is calling off their, I guess, acquisition with Figma. This was a deal that was announced. I want to say October of last year.
And what does Figma do?
It's another software company.
What kind of software? It's like art stuff, right? Like
yeah, but stuff? it's like software. It's like art software. You know what I mean?
Yeah.
And so this was a $20 billion cash and stock deal that I guess they realized wasn't going to pass muster with the regulators, so that's called off. I don't think Adobe is pretty quiet this morning, but yeah, I thought I'd mention that. So those are the M&A headlines we had today. A couple other random stuff. VF Corp said they had a bit of a cyber incident on December 13th. So it's been impacting their ability to fulfill orders. That was from an 8K this morning. And no, I think that was all I had as far as interesting headlines. Funny article in the journal about Robinhood wooing, bigger accounts. I guess they had this 1% match. So let's put this in perspective here, okay? In the last I guess call it 7 weeks, Robinhood has received $1.1 billion in account transfers into their company, and 1.1 billion in 7 weeks. And since the end of let's see, Schwab bought in 21 billion in November alone. Fidelity has 11.5 trillion under assets. So
it's a really small number. We talk about this all the time with Rob.
I
don't think going out and acquiring assets like that is a good idea for them. I think they just have to let demographics kind of run their course, give their current customers a really good experience, and hope that they have more money in the future. I think they got to play the long game, and they might need to team up with one of these big guys to help them kind of get there, because it could take a while.
Yeah.
Spencer, one hole asking about the how to get the updates from the SEC filings. Why don't you show them where to sign up for the old hot corner?
I would do that when we talk about the hot corner in a few, but let's bring on our guest right now.
We got a quick little rundown, quick little futures rundown, quickly.
Sure, real fast.
Quickly.
I see green. And some red.
Dow futures up 50 points. World's most important stock market index, new all-time highs this morning. S&P futures up 13 handles, about 30 basis points. NASDAQ futures flat. 30-year bond futures down 40 bips. Gold flat, silver flat, copper down 60 basis points. Crude oil up almost 3% today. Natural gas up almost 3% today. Dollar down again as the destruction of the U.S. dollar continues. Stocks really like that. Volatility inching slightly higher with U.S. 10-year yields inching slightly higher. And in the old funny money, Bitcoin flat, Ethereum down 2% today, down to 2150. The old Solana flat, right around $70.
Can I ask, what is your definition of, like, what is your line of demarcation for flat?
0.25.
I mean, gold's up 17 basis points.
Yeah,
that's flat.
Okay, so like below like 25 basis points or less, right?
Yeah. Depends on the asset too.
It depends on what else is going on in the market.
That's true. That's a good point.
And it depends on the asset. Right.
Adjust for volatility. You got to adjust for volatility.
That's like 0.5% in Bitcoin is pretty flat.
Yeah, exactly.
Yes, and exactly. See, somebody's paying attention.
A 0.25% in bonds is probably worth mentioning as a 0.25%.
Sure.
Right. There you go.
All right.
Well,
let's bring on our guest.
Bring them on.
Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
It's nice show you got going here.
Oh, Mr. Nauss leading the league in facial hair.
I'll take it.
Oh,
nice.
That is some beard you got there, bro.
You guys haven't had on Crypto Burb yet, have you?
He's bigger than you, right?
When he's wider, right?
Oh wow,
love that guy.
Do you have like beard envy? How does that work with
a little bit?
Hair people?
Yeah.
Do you compare? You guys got to like send each other pictures.
Well, and we're kind of like, I don't know if you've ever driven a Jeep. If you drive a Jeep and you pass another guy who drives a Jeep, you have to wave. It's the same with a beard. You just
Isn't it just a Wrangler? Is it just a Wranglers or is it any Jeep?
I think it's any Jeep. It's
any Jeep. And that's not that cool.
The Wrangler people are more aggressive with it though.
Absolutely. Yeah. Absolutely.
All right, that makes sense.
Yeah.
What about punch buggies? Whatever happened to those?
I don't think they've made those for 20 years now.
They don't make punch buggies no more?
No.
I don't even know what that is.
When you see like a VW bug, you punch the guy next to you.
Oh yeah, I remember that. Yeah. We did that in high school.
I got punched a lot, and so I started punching back.
We used to do it if they had one headlight out. You'd have to punch the other guy.
Got
it. Canadian rules, I guess.
So speaking of Canadian, financials, man, you Canadians, it's not just natural resources and gold bugs. You Canadians love your banks.
30%, I think, of the TSX is banks.
Yeah,
which is hilarious because we only have 6 of them. So it's, you don't have a lot of choice when it comes to banks. But yeah, it's a big deal.
It's better that way. The U.S. has way too many banks, dude.
Way too many.
So how much energy though? Because people would think of that without knowing, I think, as more of an energy index now.
Well, it's about the same as energy. But yeah, so if you want to know how the TSX is doing, you can bring up the XLE and you can bring up the XLF, and that's going to be about it. We usually have one big tech company at a time. It was BlackBerry. Now it's Shopify. But other than that, we don't really do much when it comes to tech. We pull things out of the ground and we sell it to other people.
Which is interesting because Toronto's got a great tech startup scene.
Yeah.
A lot of founders coming out of Toronto, right?
Well, they're trying to. I guess there's all these visa programs to take them from you guys, basically. We send our singers down there, and then we're trying to take your tech guys up here. But we'll see. Right now it's just Shopify. Again, if you want to go diving, you can always go to the TSX Venture, which is kind of our pink sheet, and you can find some cool stuff there. But cannabis, which we have a lot of, but that doesn't take up much of the market, and the charts are how cannabis has been for the last few years. What
about the psychedelics? You got some penny stock psychedelics up there. Anything good in there or not really?
We got a few. I follow a couple. There's one MindMed or something, but it's like a $50 million company. They're releasing some good studies and all that, but nothing really. They move with the cannabis stock, so the charts kind of look a lot like the cannabis chart.
You doing any channel checks? Any experimenting with these psychedelics or no?
I plead the fifth. I'm not in British Columbia. In British Columbia, everything is decriminalized now. You can do whatever you want. But the other side of the world here, we're a little bit more buttoned up.
Dude, British Columbia, man. Whistler up there on north of Vancouver, it's a party up there. Whistler is a good time, man. Good eats up there too. Good eats.
Yeah, I love that part. If you ever get up to the mountains, it's a
gorgeous up there, man. Wow, is it nice?
Yeah.
Cold as hell though. It is not for Cubans.
No. Question for both of you guys.
Yep.
This is what MSCI Canada looks like right now. I know we just talked about it's a lot of banks, but if you look at energy assets, whether it's energy stocks or energy futures, they're at the lower end of their range. They rebounded a little bit last week, kind of dug in. They're at the lower bounds of their range. What does this chart look like if energy picks it up, holds those lows, and actually starts trending higher?
That's my bull case for Canada that you landed on. I take a good look at the XLE and again the XLF if I'm trying to figure out what's going to happen in Canada next. And I think if we get this recovery, I was looking at the XLE this weekend, the oil services index in America, all those things, they're looking like they're reaching a level that could be interesting. And yeah, if those bounce and move higher, I think you definitely get a breakout in the Canadian chart right here for sure.
I mean, it's kind of talk about how resilient for this base to be breaking out more or less without energy. And I think energy, or if you want some sort of like energy exposure to your portfolio, EWC is not really a bad option because look how diversified it is, right? It looks a lot better than all these energy assets, and you're getting plenty in there. So.
Well, I will say from the Canadian point of view, what's held up our energy sector okay is uranium, right? We have a lot of like CCJ and a lot of these uranium companies that I trade. I basically exclusively trade American stocks, but you can get the good Canadian stocks down there anyway.
Yeah.
But yeah, uranium is held up really well, and we have a lot here that we sell to the world. So if uranium keeps going, and then we get oil starting to peak up as well. That's actually a big tipping point for Canada because a lot of the oil that we sell, it becomes unprofitable under a certain amount without getting boring about oil. But we pull ours out of the sand in the flat part. So under a certain amount, it just becomes unprofitable and they start shutting down wells. When it gets over a certain amount, we start to kick up, and then that's when we can sell and export more. So if we get this turn in energy, then I think those wells pick up, and a lot of these Canadian energy companies, I think, will start to do well.
Let me ask you something, gentlemen.
Hey,
does this look like a top, or does it look more of like a bottom?
To me, right? Buy, what is it you say? Buy smiley faces, sell frowny faces.
I'm asking.
Right.
I'm just asking. Does it look like a top to you?
Absolutely not.
Well, it does to many. I don't know what the hell they're looking at. Maybe they're looking at their charts upside down. You know, some people seem to apparently be doing that sort of thing.
Yeah, well, I like watching those people though on Twitter and everything, because the moment they stop being bearish, that's when I get nervous. Right?
You can't tell your contrarian indicators how great of a contrarian indicator they are, because then you start losing the data, you start getting blocked on Twitter. That's no good. Keep it to yourself.
I've thought of, because I don't want them on my feed just for like mental sanity, right? As Perlman would be a big fan of, but I think it's a good move to almost like have a throwaway Twitter account where you just follow perma bears.
Burner account for the permas.
Yeah, log on and just say, okay, how mad are they? Quantify it in some way. Have some sort of sliding scale of anger, and the angrier they are, then right, the more you're bullish.
Dude, these yield curve people, oh my god, their heads are exploding. And then like the housing and the employment people, and like just kind of like all the people obsessed with like the things that are not reality, right? So like the price of assets is reality. So the people that ignore that and focus on all these other arbitrary things like corporate earnings and all this other nonsense, you know what I mean? Like their heads are exploding. Like they don't know what to do with themselves.
The market breadth pivot one day last week I thought was hilarious, because you had the same people saying it's only 7 stocks that's driving the market, the rest of the market sucks. And then we had that day where all of those 7 went down and the rest of the market pushed the indexes up.
And then it was 100 was still up almost 1%.
Yeah, and then it was, oh man, look, the leaders are dying, so it's time. So it's just whatever can fit the narrative ends up being the twist in it. And again, for me, it doesn't affect me at all, as it's a good contrary indicator.
What is your favorite uranium stock? Let's talk about some names.
I have been trading a lot this year, and I'm biased because I'm still in a bunch of it, is UEC. And
UEC? I'm long. Yeah, zoom out on that one. Monster base.
And the reason I like that one was it's died off a little bit, but when I started, I think the short float was over 20%. It's still around 10.
Yep.
Really?
And that's, of the plays we can get through. I love uptrends with high short floats, right? Yep. Because there's going to be buyers. At some point, someone's tapping them on the shoulder and saying, okay, you got to buy. CCJ is okay, but you don't have that short float, and it's just a little bit higher up the cap scale, so volatility is going to be less. So
you would think you get less beta and therefore less outperformance from Cameco, but it's been the leader, which surprises me, because it is the largest one.
Well, and it's funny. So I brought charts. I brought charts if you guys want to fight about backtesting later. But one of the charts I brought was a simple backtest of what happens if you just buy the leaders over and over again, and dramatically, there you go. Perfect right there. So, right, we could get into our backtesting fight if we want to. But one of the uses that I have as a quant, who's also a technical analyst, is stuff like this, right? We are told all the time, buy strength, buy strength, buy strength. Well, here is definitive, absolute, right? Can't fight me on proof. The green line here is essentially from 1980 till 2023. So a big data set of what happened if you bought the top 10 stocks in the S&P 500 ranked by how close they were to the high of the year's range, right? So you take a position in range for the year and you say, I'm just going to constantly every month cycle my portfolio into whatever those top 10 are in the highest. And I put the data points on top there. It's 15% gain as opposed to 9 holding the S&P 500, which is the red line. And your max drawdown shrinks a little bit as well. So you can see by just cycling into these strongest names. So that's why names like CCJ, I think, are doing well, just because I can't remember if CCJ is an S&P 500 name or not, but it would probably have been on that list, or the same concept. So that's just, definitive proof, I guess, about why this stuff is working, because right, it will continue to work. And there's the data behind it. But
it's been a momentum trade.
Right. And it's been a momentum trade even when the market was getting killed, right? Uranium was doing fine, even when we weren't having a good time, the last month or 2 months ago when we had that pullback, uranium was doing fine. So that's the reason I'm going to stick with that, because if you did that ranking, I did the same math on the Russell 3000 and all of that as well. And it works. The idea is, right, you just want to continue to buy strengths. That's why a lot of my stuff is still in uranium right now until something proves me wrong, I guess.
It's really interesting how well energy stocks have been working out outside of oil and gas, coal, uranium, and not the oil and gas. What do you make of that?
Well, I think it just comes down. There's a lot to do when you're trading oil and gas and natural gas. There's I know a couple guys who run, because that's a big trading industry here in Canada, and they're traders for these natural gas and oil companies. They do a lot of quant models on the weather. They do, they're looking at average temperatures across Canada and America with different pipelines and all of that. And I think this is it's a weather phenomenon more than anything else. Now, it's great for the inflation narrative and all of that, because if price of energy is going down, you'd expect inflation to be cured as well. I think as long as this continues, I think it's going to be great for the overall market. An uptick in energy, I don't think hurts. It may hurt some sectors. I don't think it's going to hurt all. But if we ever get this turnaround, natural gas, not that I'm going to bet on it because I'm a trend guy, you're going to get a rip your face off rally, I think, someday soon in natural gas and oil. Just has to.
Rip whose face off?
some people that are still shorting it, I guess, down here, I think are going to have a bad time. I don't have that data, but it would be interesting to know the net short position of natural gas futures.
We got that.
Ooh.
Let's see.
Man, you want to talk about the Widowmaker? If anybody's ever wondered why they call natural gas the Widowmaker, I mean, like you needed another example.
I want to give Michael the chance here. Michael, you've been DMing me. You've been defending the honor of backtesting. I guess some people have said some things that you have wanted to challenge with regards to backtesting. So tell us, defend backtesting's honor.
Okay, so first of all, yeah, you guys have made me sad a few times. Again, I listen when I'm working or at the gym or something. I've heard us called lazy. I've heard that a few times, that we're too lazy to count. That made me really sad. But yeah,
Who
so
would
basically,
say such a thing?
we would say it loudly and frequently. But so first of all, I want to go we don't have any defined language in our industry, right? So I have to talk about. So I am what I would consider a semi-systematic trader, which means I have uses for backtests and quant models, and then I apply technical analysis on top of it. One of the closest examples I could find is David Lundgren. He does the same kind of thing. I really respect his work on the industry. So what backtesting is not, in my opinion, or systematic trading is it's cute and it's fun to do, but we're up 4 days in a row on a Wednesday, and then when that occurs, this is what happens 6 months later, and that's fun, and that for us quants, that's like it's reading those magazines at the checkout of the grocery store, right? They might be interesting, but they're not going to help you, and they're kind of all full of junk anyway. So that's what backtesting is for a lot of people. Now, what it is for me, and that's what I've kind of built a lot of these slides on, is a way to filter like a scan, like how you guys run your scans, but the way to filter everything in the market to things that are not only interesting to me, but I can prove definitively have some sort of an edge, right? So the slide I have with just the funny graphics that you can tell a non-graphics guy put together, this is kind of my workflow as a quant / technical trader. So I first go through, just like you guys do, hundreds and hundreds of charts a day, right? I'm trying to figure out what's happening in the market. I'm trying to get a feel for what I think is going to happen over the next little period of time. Then I have a basket of algos that I'm always working on that are going to do well based off certain market environments. So then I can go to those algos and say, I know what my expected return is. I know what the output of those will be. And then from there, I can pick from those algos. You see that there's humans on both ends is basically the point of this graphic, is that there are people out there who develop systems and just let the systems work, and that's fine. But I think this hybrid model of man and machine is kind of the best for a lot of people out there. So we don't have to go through all of the next charts, but I have just a couple of them showing an example of what I think's going to happen in the next few weeks, right? We all know the Santa Claus rally is likely on its way, and the statistics behind that. But we are at a major inflection point for a lot of charts this week. We have the MDY. You can see we're up near this resistance point. We've hit it 4 times now, and we're up pretty big to get to it. We can just hammer through these. Next, IWM, same thing. We're at resistance. UUP is getting close to a breakout level that could be support. We have TLT that's bouncing to a breakdown area that could be resistance. So if I have a theory that this week could be a pullback week or a rest week, I went this weekend to an algorithm I had, and that's the next chart I have just below that one. And this is an algorithm that just spits out stocks every week. The red line is the S&P 500, and the green line is the app. If I just traded this algorithm as I built it, it's simple pullback, uses 2 indicators, and simple pullback algorithm. The thing I like about it is you can see in all of these dips. So we have 2000, the first arrow is the .com bubble, and it did well. And then the next one is the great financial collapse, and it did well. And then the last one is the market we had in, called Russia or inflation or whatever it was, and it did okay. Not that I think any of those are going to happen. I think just we're in for a rest week before we break out of these things in the Santa Claus rally. But
Michael, hold on. What does it look like though if those initial assumptions that you use to get to the algo end up being incorrect? Because we're not magicians, we're not perfect, right?
Well, but
how does it? What happens then?
I will still go to the algo because again, I will filter out these by charts that look well, right? You can see that even in bull markets, this algorithm does well. It's just when the market pulls back, it also does well because it's a pullback. So it's looking for strong stocks that are pulling back. So then on the weekend, I went through the output of this and I've got 3 names here that it spit out that I think look good. And if I'm right and we're going to get a pullback, we may get a good price on these names. So the first one here is just CARR, CARR. Again, I don't know anything about the companies.
Carrier. Yeah.
I just look at the one. But that's just the next chart down there.
Nice chart.
There you go.
Right. So this is a nice looking chart. I know again. So the instead of just going through all of the charts in the market to have them spit out, I know that if the market's going to pull back, that based on the weekly candle setup on this one, there is a chance that it looks good. Right. So I'm going to take a look at this one. I've got my level set and all of that. So if this one bucks the market trend, I know there is a 62.3% chance based off a back test I did that went back to the 70s on this indicator to now that holding this for a period of a couple of weeks to a month based off what the indicator that it's built on is going to do next makes sense. But again, I'm not just going to follow that. I'm going to look at the chart, right? I'm going to do my analysis on kind of both ends. Other one here, which I think I heard there was some news this morning, was Roku. It was pulling back to an interesting level. Popped up on the scan this weekend. So this chart may look completely different on the open, but another good look. So again, just the whole rant of combining the man and the machine part, knowing that together, I think it makes a lot of sense. Last one here is TRI. And this is another interesting one that's got a pullback. So I hope with a little bit of process of what some of us quants do, I was able to redeem for my brethren out there that we're not ignoring charts. We're not lazy. We know how to count. But we have our own systems in place, right? And I would argue that following your guys' work and knowing what you guys do, I would argue that you are semi-systematic as well. You've got, certain patterns you go through. You've got processes you go through. I think quants and stats guys like me, we just like to lean a little bit more on things that we can touch and hold and know, okay, I know that if I just follow this system, I'll be okay. But can I do way better if I apply, things that we know about technical analysis on top of it?
Yeah, Michael, it's like, that chess tournament where you could enter as a human, you could enter as a machine, or you could be a human with a machine. And it's the humans with the machine that are constantly beating the machines alone or the humans alone, right? So use the machines. Like, don't be a moron.
Well, and for a lot of new traders, I think a lot of the problem is, so you go on the internet or you go wherever, and it's information overload. You can get, this guy's a perma-bull, this guy's a perma-bear, this guy's this system, this guy's got this system. But for me, now I know I have these lists of systems. I know how they backtest. I know how they perform in different market environments. My job is just to try to figure out what market environment we're in, and then try to figure out which of those names I think will do well. Knowing it gives you a little bit of confidence, just being able to see the back test and say, okay, I can't be too bad because the system in and of itself will work. I just want to try to make it work better. Right.
Yeah, that makes sense.
I'm okay with it. No, I like it. Nice job, Michael.
Mike, before we let you go, Mary, our own Mary, was watching the show, and she was like, wait a minute. She saw you. She's like, that looks like my cousin Ben. So my question to you, Michael, is do you also have a cousin Ben?
Wow.
Dude, cousin Ben has a weak ass beard compared to our boy Michael.
Listen, I didn't want to say anything.
Tell your cousin Ben to step up his game. It's weak.
I didn't want to say anything, but yeah, he could use a little bit, right? You got to oil it, conditioner it a little bit, and let that guy grow.
Don't come to us with that weak shit. Come on.
All right.
Michael Nauss for the win.
Thanks,
Mike. Always a pleasure, man. Thanks for coming on. Hey, we have to start saying this now to all of our guests. Happy holidays, man. If we don't talk, Merry Christmas, Happy New Year, and we'll talk to you again soon.
You too, you and all your families. I hope you guys have a great Christmas, and whenever you want me back, I'm standing in this room looking at algos and charts. So
nice.
Appreciate it.
Keep up the good work, Mike.
Thanks. Have a good one.
All
you
right.
know, I still can't get over that Jingle Bells is not a Christmas song.
You know what though? Ever since we learned this, like a month ago, I've heard it more than other Christmas songs.
I feel like me too. I can't believe it's not a Christmas song. Who knew it was a drinking song for Thanksgiving? I mean, it's mind-boggling to me.
Yep. Yeah.
Right. Wild. And the fact that Jingle Bells was written by J.P. Morgan's uncle.
I'm not trying to jinx it, but I have yet to hear the Mariah Carey Christmas song this Christmas season. I have yet to hear it.
You know that she's in Madison Square Garden this week, and if my wife would have found out about it earlier, I would have ended up there.
Yeah. Knock on wood for me.
But, she just found out. I'm like, oh, are we going? She's like, no, it's too late. I was like, oh, that's a shame.
All right. 9:32. We are open. Yes, as we were discussing earlier, steel is running today across the board. You look at the top gainers, and it's dominated by steel stocks. What else jumps out to me? You got, as always, a smattering of biotechs down 20, 30, 40%. That's normal. VF Corp down 6% after they announced a security breach of some kind. And not much jumps out to me.
You guys see the new regulations and guidelines around security breaches and hacks for public companies?
What, that they have to release it, right?
Unless it's, what do they call it? Not in the government's interest type of a thing.
Can you explain to us? None of us know what the hell you're talking about.
So cyber hacks have become a really big deal for public companies. They pay ransoms and bribes. Right. So it's a problem. So how to disclose around that becomes very tricky, because you don't want to, disclose something that maybe makes you even more vulnerable, right? But you want to explain if there was some sort of fine that you paid that's not a part of your ordinary operations. So not to expect that in the next reporting period. So they came out with a whole list of stuff kind of governing how to navigate this, because it's a huge problem for public companies. Which is why these cybersecurity stocks are just, one of the best groups in the market. It's a big trend, a big theme there. So,
all right, let's do a little hot corner, and then we'll bring on Mr. Incully.
Oh, I wanted to.
Hot corner. So hot right now.
What was that? Sorry.
Yeah, no, all good. I wanted to mention the COT. We'll do it later in the show, though.
Okay.
Address Mike's neck ass.
Somebody bought a lot of burritos, looks like.
Dude.
Greg Engels. $2 million on the
Who is this guy? Who is he?
Director.
Huh. A lot of money, $2 million.
Ooh. It's enough money for you. And then my friends over at Jupiter Asset Management taking a big position in the Western Union. Look, Western Union's big in South Florida. I'll just say that. They might have been doing some boots on the ground.
Dude, Western Union used to take what was it? It used to take 3 days to transfer funds 140 years ago. It still takes that long these days.
I don't know.
Why do people use Western Union and not just the Lightning Network?
It's the availability situation.
Right? What does that mean? Availability.
You would never use Western Union, but there are groups of people who absolutely rely on Western Union.
Why? Why wouldn't they just use the Lightning Network? It's faster and cheaper, isn't it?
They don't know, or they're underbanked. That's probably the biggest one. They're underbanked.
Because they're sending money to the Caribbean or Cuba or Jamaica or Haiti.
Right. So, okay, I'm going to ask the question one more time. Why are they using Western Union, that you need banks and all these things for these underbanked people, instead of using the Lightning Network?
Your grandma in Haiti doesn't use the Lightning Network.
Why not?
But she can go.
I don't have any grandmothers in Haiti.
I'm just telling you. That's what it is. That's the answer. I don't know much.
It's just laziness.
It's not laziness.
What is it then?
accessibility.
JC, my grandpa can barely work his TV remote.
Can't.
Okay?
They can't work the TV remote. I had to program YouTube TV for my grandpa.
So it's
trying to figure out a way to put it so it's just there.
Western Union doesn't require ID. Really? That's not shady at all.
Hey, that's the business. That's the business.
No, but some good guys over there at Jupiter Asset Management. It's a nice shop.
Are they actually your friends? I thought you were just saying that.
Oh, I know. Yep.
This Western Union, how does this thing still exist? How is this not a zero yet?
I don't know.
Again,
$4 billion in market cap. Sounds like 4 billion too many.
It serves a critical function for some people's lives.
Yeah, it sounds like a Ponzi scheme.
The
scheme.
The Chipotle stands out, and then how about that Macy's? Hey now, how about that Macy's?
Hey now.
So we talked about the sympathy buying of what was it, Nordstrom calls, right?
Yeah.
Right around that big Macy's news. Now it's the actual Macy's call.
Speaking of things that aren't at zero yet, how is Macy's not at zero?
I was watching some pickleball this weekend. Big thing.
What?
JC's getting involved in the pickleball.
I
play real tennis.
I do play real tennis. I'm getting pretty freaking good though. I'm not gonna lie. Macy's $5 billion in market cap. How are these companies still around?
Footprint.
Oh,
yeah, it's the real estate, right?
Footprint.
Good. Macy's, like who goes to Macy's? Seriously.
I just bought
Union. Who are these people?
I just bought a bed from Macy's. Got a great Black Friday deal. Bought a bunch of pillows and bedding and stuff.
Who buys beds at Macy's?
Well, here's the thing.
I do.
There's still a certain value in having a physical presence, right? Like it's not worthless to have an actual brick and mortar store. It's worth a lot less than maybe it was, but these stocks have been haircut, discounted significantly for it over the last decade. So $5 billion for a Macy's, that's not crazy. It's not crazy. It's not a lot.
I'm a little bit surprised to see Macy's on here though. I mean,
market zero, Smokey. Market zero.
Over, so
those shareholders entered a world of pain.
You know what the harder part becomes for all of these like physical store operators or brick and mortar operators? It's downsizing and all the decisions that come with these big cuts, right? And planning around that. Can be tough to navigate when you're closing 50% of your stores, you know?
Close 100%.
Yeah. All right. To whoever it was in the chat that asked about how we track these, well, we do the hard work for you, so you don't have to. The Hot Corner goes out every single day, at least every day that there's a filing. Every so often there are no fun filings.
Rarely.
But 99% of the time there are filings. So we send it out for free to our list. I'll have a landing page for you tomorrow. If you want to get on the page like right this second, or get on the list right this second, you can email us. I'll put it on the screen, questions@stockmarketmedia.com. But I'll have a landing page for you tomorrow. And you can
the answer to how do we get this data. First of all, some of us are very experienced when it comes to mining SEC databases or the Edgar database. We also have friends with some really great data and other friends who can do these tech things.
So many friends. We have so many friends. We're like so pops.
So we take our skills and expertise with these filings. We have our data friends. They help us get it. We have our IT friends. They help us pull it. And it's become a seamless process. And we look at these every morning to kind of sift through, just like Mike talks about scanning down to a universe that's more important, right? We scan down, we filter it down to a universe, then we kind of pick through the most important ones. And we bring them on here and we talk about them. We send out a daily note.
Yep. All right. Should we talk commodities? I suspect with
I think we should.
Mr. Cully back in action. All right.
Hit it.
Morning, gentlemen.
Mr. Colley.
How goes it?
How about the zloty continuing to act well? Stocks like it. Stocks like that strong zloty.
Dollar taking a pause. But yeah, how about that zloty?
When you talk about the dollar taking a pause, you saying a pause in the downtrend?
Yes. Tactical downtrend, yes. It's taking a pause.
Man,
right around that 102 level. It's a logical level to see some buying come in.
Is it? Why?
You zoom out on the weekly chart. There's this is zone between around 100 and 103.50.
Yeah.
We talk about, drawing our lines with crayons, and this is a great example of that.
You don't think that's too wide of a range? I mean, it is what it is. You can't, right? You can't argue.
Yeah, it is what it is. And when we zoom in, we can get more tactical and more precise in the levels that we're watching.
What do you think? 100, 103.5, that range?
Yeah. And then I really, this 102.50 level has been respected in the past. It's respecting it now. So I'm watching that level. As long as it's below 102.50, the path of least resistance is lower. Interesting little bullish divergence there in the 14-day RSI. But as we know, those divergences can work themselves out. So no reason to step in and start buying dollars.
So, Ian, we have this long-term level or line in the sand, 100 and change in Dixie. Would you say something like 4% on the 10-year? Also, we have this like super structural level.
That's the level. Absolutely. 100%, Steve.
Both of them are right there.
Right. Yeah. Is a 10-year that's like with the 2014 highs or late 2013 highs, I believe.
Further.
Seems like again, it makes sense for the 10-year to take a
there's
breather.
A shelf. 2009, 10, like almost another touch in 11. Yeah.
Yeah. So maybe it's the 30-year that's pulling back to a logical level of potential support as well from resistance.
What do you think about the European yields? Yeah.
Well, they're rolling over, and I think that's a heads up. We've been looking to European yields through this entire cycle. They've been a great leading indicator or confirming indicator when it comes to U.S. yields. So to see European yields roll over, the tip in the hat. The tip in the hand. It looks like they're heading lower in the U.S. as well. But it's interesting to see energy, XLE coiling over the past year or so, kind of forming an ascending triangle. It's also interesting to see the equities for rising rate environments, that EQRR ETF continuing to base and heading up towards the upper bounds. That's, do you think, is that financials? I wanted to ask you guys about that. Do you think, because it's predominantly financials, is that correct?
It's like 40% financials.
So
40 was like energy last time I looked at it.
Yeah.
Yeah, you can even do like a custom XLF, XLE. We used to overlay those. It's the same thing.
Yeah. But when it comes to commodities right now, I think the big theme is that rotation out of energy and into metals. And we're talking about steel. Steel is having a heck of a day.
Hold on, just on that thought. You know what's funny about this EQRR? It was built equities for rising rates. It's 40% financials. But since they launched that fund, financials actually became stocks for falling rates in a big way. Right? So it's called the Equities for Rising Rates Fund. It's not that anymore. Not.
These wild ETFs are
the recency bias is irresponsible because they're built for a specific type of correlation during a certain kind of environment. Right. And when that environment and correlations change, they don't. I mean, you still have these ETFs that like want to buy treasury bonds as like a defensive, trade when it hasn't been forever. So that ETF sucks. Like it's not a defensive trade, right? Like you're seeing that like EQRR, remember it used to be, valuable. Now it sucks. Like they haven't adjusted.
The ETF industry,
You have to be aware of these things.
The ETF industry operates on a monster lag, right? So they launched like 5 of these inflation funds, like literally as inflation was peaking last year. Remember, everything was an inflation fund. Those are all going to go away now.
Because think about it, it's a combination of like the portfolio managers are just like stubborn because they wrote some white paper once, and then they make an ETF out of it. So like they think that like the market is going to get back to what their stupid white paper once said, even though that's not how markets work. And
they ran a back test.
They ran a back test once. And then on top of that, then think about like the sunk cost into launching an ETF and the pain in the ass and all the hoops you had to jump through to even launch the damn ETF. Like it's like instead of just admitting that the thing sucks and is useless and does probably more harm than good, you just sit back and just pray every night that correlations get back to what your white paper once said. You know what I mean? Like
that sounds
this is
terrible.
not how life works, but it's important for investors to like observe,
Yeah.
I mean,
sorry, Ian. We had to get that out, I think.
No, yeah. I mean, that's 100%. That's why I wanted to bring it up. That's why I wanted to bring it up. So I'm looking, I was like, nah.
Yeah, but it's specifically important in the FIG complex.
Yeah. 100%.
Yeah.
100%. But to go ahead and to move on to base and industrial metals and just metals in general. We're seeing energy. You're seeing money flow out of energy and into the metal space, and it's not just gold and silver, palladium. I really like palladium right now. Platinum is carving out a nice base. So, even we talk about steel. Steel had a great week last week. It's SLX is breaking out. The components of this ETF look great. We got a lot of trades on in these components. So it's interesting to see that. I think that's the main theme right now when it comes to commodities. Metals are finally starting to perk up and take a leadership role.
What are you making of this commodities response ratio?
Rates are rolling over. Bonds are catching a bid. I mean, it's weighing heavy on energy. It's still, looking at XLE, it still looks, it's still consolidating. Crude oil is trying to dig in. Gasoline's trying to dig in. So, I'm not ready to completely ditch energy. And this is an interesting chart here. This our equal weight energy index relative to base industrial metals. Revisiting a logical level to see energy dig in and start to outperform. We'll have to see it. I want to see it.
This big wave lower recently, would you say that's more to do with weakness in the numerator or strength in the denominator, or a little bit of both? What?
Say a little bit of both, but more weakness. I think it was led by weakness in the numerator.
Yeah, it looks like you're right.
And then we're starting to see strength in the denominator, and if we're buying strength, it's going to be in base industrial metals and precious metals as well.
How about
a lot of great breakouts? I'm going to talk about that later today. It's exciting. It's exciting to see these. We watch these charts for months and months and months, in some cases years, to finally see them start to break out.
I know you're looking at other like commodity subgroup ratios like this, and then scanning every week for like the strongest actual contracts. How notable is the rotation into base and industrial metals? Like, are you seeing it come up over and over? Is it a theme yet or no?
I wouldn't say it's definitely coming up. They're definitely in the near term the strongest area.
You think that's becoming the group to kind of be in?
Yeah, it's becoming the group. We'll have to see how things play out in the coming months. But this is, if you're looking for an area to buy strength, it's base industrial metals and precious metals.
Isn't it funny? Isn't it funny, Ian, how like that space was already doing well, and then you get a headline this morning, like a really really large M&A deal in that space, like what some would say was even a massive overpay, and it seems like bullish things tend to beget more bullish things, right?
Yes, absolutely.
Well, we talk about this on here all the time. I think I even tweeted about it last week after the Fed meeting. Don't be surprised if reactions to news or headlines or earnings or Feds or CPIs, don't be surprised if those reactions occur in the direction of the underlying trend. It's much more common for news reactions to follow the underlying trend than reverse it.
Yeah. It's funny how that happens.
Funny how that works out. Amazing, Spencer. Huh?
The market's good. It's a smart market.
Market's pretty good.
All right. Any other charts? I mean, you want to talk about this gold? What is this Palladium about?
Palladium, I wanted to bring Palladium because the PALL ETF, that Palladium ETF, is digging in at a logical level. Those former 2018 lows and bouncing with some authority. And when we look at the futures contract, it's reclaiming a key extension level, longer term chart. And we have, commercials have held, I should say, over the past few months, their largest net long positioning in history. So, we look at this is a great example of, conditions that for an unwind that will fuel or could fuel a rip roaring rally in Palladium. The signal's not quite there yet.
Wow.
We need to see the unwind first, but to see the strong price action last week, I think we're headed in the right direction for the bulls. Yeah.
And is PALL like a viable vehicle?
Yes.
Or equity? Okay.
As viable as it's gonna get for this sort of thing, right, Ian?
Yeah, and that's the thing too. It's like the futures contract, the Palladium futures contract. It's a big contract.
Okay.
So you have a lot of capital.
Is it really?
It is. You have to have a lot of capital to be able to control a single contract of Palladium. A lot of the base industrial metals are like that. That's why I like PALL. And I mean, you can trade against 85, and he's like, I mean, it's already moved quite a bit off of that 85 level. But I look at this as a longer term play.
Yeah.
So wide stop, small position. I know, JC, you like to point out that small position size, it's like a superpower. And I think this is a great place to take a very small position in Palladium. Like an initial kind of just nibble on this. And we get back above 138.
Let's remember that we're not in a reversion to the mean business, but in a reversion beyond the mean. It was pointed out to me last week by a smart fellow that while that is true, once you get beyond the mean, the returns become much more volatile. And the trend becomes much more volatile, and money is more difficult to make than in the reversion to the mean. The beyond the mean part is harder. So I thought that was a valid point.
That's excellent. So we're in a good spot then with Palladium, because we're reverting to the mean, and then we can feed the ducks as it goes beyond.
You're showing these 2018 lows here. I mean, you could zoom out even further. This is a well enforced level. You got like the 2014 highs too, coming in right around the same area where we're seeing the rebound. Is this a way to trade or make a bullish bet on precious metals? Could this be a vehicle? You want to speak to that a little bit? Yeah or no?
This is more of just a bullish bet on metals in general. I hate to lump Palladium into the precious metal space. I asked my wife, she's a jeweler, and no hesitation, Palladium is a precious metal.
Really?
It doesn't act like one though, right?
They look very different.
That's really interesting that she said that quickly that it's a precious metal.
Oh yeah.
Why did she say why?
It's used in a lot of alloys.
But is it used like in the mechanics of the watches and stuff like that, or is it used in the actual jewelry?
It's used in the actual jewelry. Yeah. So I don't know about watches.
I don't either.
I can't speak to watches.
I don't know nothing about watches. I know I need a new watch. That I know. I don't know where to get one. I asked Howard Lindsay, and he's like, "You can't afford it." I'm like, "All right." So I guess I'm not getting one.
Here's a watch.
I know nothing about watch.
I got a watch right here. This is great. Tell us the time.
No, but like I want like a nice watch. I don't know what kind I want, where to get one, how much they cost these days. Like, I don't know.
It's going to be 2024 soon. Get an iWatch.
No. They're so ugly.
Hmm.
And what do I need more electronic devices for? I have enough.
I want one.
Yeah, probably
I'm
right.
just gonna lose it.
I hope Santa Claus hears me. I want an iWatch.
Say it louder.
What are you gonna do? Count your steps or whatever people do with these things? Are you gonna talk like Dick Tracy? Like, hey,
yeah,
sweetheart, how many croquetas do you want?
Like Inspector Gadget, healthy stuff.
That's useful. All right, you want to do some recess?
Yes.
All right. I'll start. I'm looking for a recommendation. Over the weekend, I came into possession of my childhood collectibles. So I'm talking trading cards. I'm talking like a handful of comic books, mostly trading cards, right? Got some sports cards, probably worthless. Got some Pokemon cards. I have no idea. What should my method be if I want to gauge? Where do I go to gauge the value? I know I can always go to a shop near me, but I don't really want to do that. So is there a good site I should go to gauge
eBay.
the value of these things? eBay.
eBay.
Besides eBay.
It's always been eBay.
It's always been
eBay.
Yeah, definitely. They have all that stuff.
Yeah, and I put away the
eBay
ones
stuff.
that are worth the most and then get them graded.
You can go. You can still find like Macy's physical locations. Found a great one I was telling JC about down in Stewart the other day. It's huge. You take it to those guys. They could tell
like
you
in 40-year-old virgin, how he goes to the eBay store. He's like, so you don't actually sell anything, right?
Right.
Jonah Hill wants to.
Yeah, Jonah Hill, right.
Yeah, Pokemon cards. Sure.
Okay. eBay. Yeah, I know there's like, there's like comic book stores or whatever that I can go to, but I don't really want to
Find a
like,
sports collectible store. They have sports collectible stores near you. They used to have like Steiner.
There's some near me. I don't know if I trust them, but
there used to be some like small chains in the tri-state. I don't know if they're still around, but
and you know about sports, so you know about who's who. So like, you know,
I know that my sports cars are probably worthless. I think I might have a couple.
Surprised. Get some gloves. Get some gloves.
All right. Well, they're all in. I have them in sleeves. They're all in sleeves. So,
all right.
Yeah.
I know that way too.
Man, deep in 2020, I was hunting through all my baseball cards, and I knew I had a Roberto Clemente somewhere.
Yeah.
And
I finally find it, and it's the one Topps where they printed like 50,000 of them, and it doesn't say Roberto; it says Bob. Oh, it says Bob Clemente. I was like, "Where the $100?" I was like,
all right.
Still have it. It's all right.
I just got I recently, like in the past year, I bought on eBay for cheap, like $20. The, the Billy Ripken that on the barrel it says "fuck face" on it. You know the Billy Ripken card.
I used to work with Billy Ripken. He's an interesting fellow.
Is he?
He's an interesting guy. Yeah.
Interesting how?
He's allowed allowed obnoxious former jock. So when he would just like yell, like when I worked at MLB Network, the offices were a very large building, and I'd be at one end, like my team was at one end, and like his office was way at the other end, and he would literally just yell like across the entire building if he like wanted something from like our team. He would just holler. Like for the whole
slide 2 up there. Go slide 2.
He's an interesting fellow, that guy. He's fun.
This one. It's good.
But I know that might be. I think I have some basketball cards that might be worth something. My baseball cards are probably worth nothing. But
I got some pretty good ones. I got a Lou Alcindor rookie.
Yeah.
I got Reggie Jackson rookie. I got Mike Schmidt rookie, Johnny Bench rookie.
Yeah, those are good. I don't have any good rookie cards.
I got some pretty good ones.
I don't know. I'll have to check.
I have The Rock when he was with the University of Miami, which is worth about $80,000. And if he becomes president of the United States, that thing's worth $1 million.
All right, that's good. That's a good investment.
So let's go, Rock. Let's go, baby. He tweeted at me on Twitter about the card.
Yeah, I remember that. I remember that. You had the whole like in the book. You had the whole page of the team.
Yep, the whole thing. It's mint condition. It's a 10.
You could file that statement away with things that only people from Miami say.
What? That I hope The Rock becomes president? Well, I have vested interest in if The Rock becomes president, that card's worth $1 million.
Yeah, maybe.
That's a lot of money.
Yeah.
These are American dollars. These
All
are
right.
not Zlotys.
I'm rooting for you.
I'm
Yeah.
rooting for me too.
All right. Anyone else have any recess, or did I just hog it all?
You hogged it all. I'm
Um,
bragging about my $80,000 card.
All right.
It's a lot of money.
I watched
Cool.
the new Scorsese movie. It was okay.
Which one?
3 hours long. Right?
Killers of the Flower Moon. It was
It
okay.
wasn't that good.
Oh, yeah.
It's okay. I mean, De Niro was great as usual. DiCaprio was okay. It's different. It's a very different Scorsese movie. It's about like Indians in Oklahoma and like a land feud. Interesting.
Seems like more of a film, less like a movie, more of just a film.
It's not going to blow your mind. Yeah,
Right.
but it was entertaining.
All right. On that note, we'll hop off here. So we do have, it's Monday, so we got the Flow Show with Strazza and Sean coming up at 11:30 a.m. Eastern Time. Stay tuned for that. Thanks to our guest today, Michael Nauss. Thanks to Ian Kelly for hanging out. Follow us on all the socials. We'd appreciate that. We're on the gram, we're on the YouTube, we're on the X. There it is. Check us out. Hit the like button, please, and thank you. And go make some money, and we'll see you guys later.
Rest in peace, Frank Wycheck.
Wow, tight end.
Yeah.
All right.
Fell out of like a ladder or something.
Remember that crazy play?
I do. It was great.
Run it.